Hey guys, it is Julie here with TipRanks. Today we're taking a look at two stocks that JPMorgan analysts rate a buy. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at two companies that have recently picked up buy ratings from JPMorgan. Of course, they have other analysts weighing in as well, so we're going to see what they predict for the stock's future and what it is that those companies do. Don't forget to download the TipRanks mobile app so you can access the wisdom of thousands of Wall Street analysts on the go. Plus, check out the Smart Investor newsletter over on TipRanks.com. The Smart Investor newsletter will help funnel TipRanks knowledge into your investing success. The Smart Investor actively manages a long-term portfolio of 25 to 35 stocks, and a weekly email is sent with portfolio updates and commentary. So you can follow links in the description down below to check that out, and the Dividend Investor newsletter while you're there as well. Now we're going to get right into these JPMorgan rated stocks, starting off with Procure Technologies. Their stock trades under the ticker PCOR and is currently priced at $66 per share. Now they have seen some ups and downs this past year and are fairly flat overall. Looking at the last 3 months, they have seen growth of 13% but have dropped off in the last couple of weeks. Procure Technologies is a software company that focuses on the construction industry. They offer construction management software that revolutionizes the way construction professionals collaborate, communicate, and manage projects. Procure's comprehensive platform offers a wide range of tools and features, including project management, document control, financial management, quality and safety management, and resource planning, all integrated into a single cloud-based solution. They just shared their latest earnings report on August 2nd, and they came out with a surprise profit on their earnings per share versus the anticipated loss. Their Q2 earnings per share came in at a positive 2 cents. This was versus an anticipated loss of 9 cents per share. On the revenue side, we came in at $229 million, which was an increase of 33% year over year. Their CFO commented that although the demand environment remains challenging, we delivered solid results in the quarter. Looking ahead, we remain focused on our pursuit of efficient growth and are on track to reach positive and sustainable free cash flow this year. Weighing in on the stock following this recent earnings report was JPMorgan analyst Alexei Gogolev. He noted that we continue to like Procure as it falls into a cohort within our vertical software coverage, which is able to stay relatively insulated from weaknesses in the underlying market they serve. Procure is well positioned because they are automating among the least digitalized industries in the global economy. On the periphery, opportunities such as emphasizing payments and insurance solutions are set to offer competitive services, which are to become additional products to cross-sell and upsell to clients. His buy rating on the company comes with a price target of $85 per share, and he is one of 12 current analysts with a rating on the stock. Breaking down to 11 buys and 1 holds, the average price target comes in at over $82 per share, which would be a growth potential of over 24% for the next year. Down below, we can see a detailed list of those ratings. On the low end, we do have our hold with an upside of 14%, and many analysts around that same $85 price target as JPMorgan, which would be an upside of nearly 30%. Next up, we have Scorpio Tankers. Their stock trades under the ticker STNG, and they're currently priced at $50 per share. While they have cooled off here in the last 6 months, they are up 20% overall in the past year and have climbed up in recent weeks. As the name may suggest, Scorpio Tankers is in the shipping industry, specializing in transporting refined petroleum products and bulk commodities. The Monaco-based firm is a significant player in the global shipping industry with a fleet comprising modern vessels, including eco-friendly carriers designed to meet environmental standards. They serve a clientele mix of oil majors, traders, and government entities across the globe. Now, there can be a lot of volatility in the shipping industry as it relates to supply and demand, plus rate fluctuations, and this did affect Scorpio Tankers in their recent quarterly report. For their second quarter, they reported earnings per share of $2.41, but this did fall 7 cents short of Wall Street expectations. Revenue came in at $329 million, but did fall 18% year over year. But as you saw with that recent uptick on the stock chart, investors did not seem fazed by this. Neither was JPMorgan analyst Sam Bland. They noted that seasonally, August is typically a weak month. However, they note signals that rates are beginning to improve, with Scorpio now indicating the LR2 rates are above 40,000 per day. To some extent, this improvement seems to be sentiment driven around improved macro outlook views, as opposed to any actual demand-supply improvement. While it may not be linear, we expect a general upwards movement in rates over the coming months, driven by seasonality and expected increases in demand. They rate the Scorpio tanker stock a buy with a price target of $85 per share, and they are one of 5 analysts with a current rating on the stock. The average price target comes in at $68.40 per share, which would be a growth potential of 36% from current prices. Down below, we do have our JPMorgan rating here at $85, which is on the high end with an upside of 70%. And of course, on the low end, our hold rating at $53 would still be an upside of nearly 6%. So there we have 2 stocks, both with buy ratings from analysts at JPMorgan and an overall strong buy consensus from the street. Let me know your thoughts on these 2 companies in the comments down below. I always love to hear your guys' opinions, and please keep in mind these videos are never a suggestion to buy or sell any specific stock, just letting you know what these Wall Street analysts are looking at. So please make sure you always do your own research and due diligence and stick to your own investment plan. Thank you guys so much for watching. I hope you have a great day, and I'll see you back here next time.